Namaskar and a warm welcome to our weekly commodity audiocast. I am your host Ravindra Rao representing Kotak Securities Commodity Research Desk. As in each episode, we will be guiding you by sharing valuable insights, discussing trading setups, and exploring the latest trends that are shaping the market landscape. So let's explore the fascinating realm of commodity markets. In a significant turn of events, the markets experienced a surge in positive momentum after the Federal Reserve delivered its strongest indications yet of a forthcoming pivot to easing monetary policy in the coming year. While the maintenance of the status quo was widely anticipated in a December meeting, the summary of economic projections brought a pleasant surprise for investors. For the first time since March 2021, FOMC, that is the Federal Open Market Committee officials, projected no interest rate hikes. Notably, the Fed funds rate was forecasted to be at 4.6% by end of the next year, signaling a potential 75 basis points rate cut, well below previous projections of 5.1%. Markets were expecting a hawkish tone from Fed Chief Powell, along with the pushback against early rate cuts, which was absent. The dovish shift, coupled with Fed Chair Powell's acknowledgement of progress in easing inflation, has heightened expectation of a near certain rate cut in March. The market response to this news has been overwhelmingly optimistic, with the investors already pricing in 150 basis points of rate cut for 2024. Consequently, the US dollar slid to 101.77 and US 10-year treasury yields dipped below 4% for the first time since August. Meanwhile, the Dow Jones achieved a record high, closing above 37,000 for the first time, and the S&P 500 approached all-time highs. Additionally, the European Central Bank and the Bank of England followed suit by maintaining their rates in their final policy decisions of the year. Amidst this market dynamics, COMEX Gold surged to 2062.9 per troy ounce, and silver traded as high as $24.59 per troy ounce, benefiting from rising bets on a reduction in borrowing costs in March that weighed on the treasury yields. The yellow metal started the week on a negative note after a resilient US labor market data released during the previous week prompted investors to push back against early rate cuts. However, things changed after the US CPI and FOMC meeting. On the price action front, both gold and silver seem to have taken support near important levels of $2000 per troy ounce and 23 per troy ounce, respectively. On the upside, however, 2080 to 2090 levels in case of COMEX Gold and in case of silver 25.70 to $26 remains a stiff resistance. So until these levels are breached, we expect the prices to trade range bound and consolidate a bit. And in case of MCX, similar pattern is seen with supports near 61,850 in case of gold, and in case of silver 72,000 would act as a good support. And on the upside, the recent highs of 78,000, close to 78,000, 79,000 in case of silver, and in case of gold 64,000 would act as a resistance. So until this support and resistance holds, we expect a range bound movement in gold and silver both. On the economically sensitive commodities front, crude oil and base metals also experienced positive trends, with crude oil gaining support from an improved global demand outlook after IEA and OPEC report and a significant US inventory drawdown. Base metal received a boost from the relaxation of home purchase restrictions in Beijing. On the technical front, in case of crude, $72.50 per barrel would act as a resistance, which was the earlier support, from where once it penetrated, it fell to close to $67. So now 72.50 would act as the resistance. If it breaches that, we might see prices going higher towards 75 again. And on the lower side, the recent low near $67 would act as a support. So we can expect a range movement in crude as well. In case of copper, copper has been moving higher on back of a bullish engulfing pattern on the weekly chart. And although the rise is not very swift, we are seeing intermittent corrective dips in copper. The prices are still holding well above the support levels of 704. And if this continues, we expect prices might very quickly move on to 740 to 745 in the coming sessions. Looking ahead, market focus will turn to flash PMI figures for early insights into the business activity. Key economic indicators, including US GDP and core PC figures, will be closely monitored in the week. The potential for a soft landing increases if growth moderates and inflation continues to ease. Additionally, the Bank of Japan's monetary policy decision will be eagerly awaited as speculation regarding its exit from a negative interest rate policy gained momentum following comments from BOJ governor and one of his deputies last week. Furthermore, markets will keep a close eye on China for additional support measures, especially after the People's Bank of China injected a record amount of cash via 1 year policy loans. As we wrap up another insightful episode of Commodity Audiocast, we hope you have gained valuable insights to enhance your commodities trading journey. Until next time, happy trading and may the markets be ever in your favor.